next video. This one is on Trendlines. Okay, so we have this Trendline tool on the left-hand side. And what we're going to be doing is running through the importance of trend lines, how we draw them, and the significance of them. I'm going to use the same chart that I used in one of the previous videos, which is the Fibonacci. Okay, and it's very, very important to understand that everything that we're teaching you in these videos are individually very, very important, but put together. Okay, so when you're analyzing the market and you find trend line crosses, bullish engulfing candles at a Fibonacci region, for example, you have a lot more, a higher probability of actually getting that trade correct and getting that direction correct. So understand all of these aspects individually, but then gel them together to create that perfect strategy. And then moving forward, your trades will have a lot higher probability. Okay, so first of all, with regards to trend lines, the simple thing to understand is if the market is in an uptrend, okay, if the market is in an uptrend, what we want to be doing is we want to be drawing the trend line below, okay, and if the market is in a downtrend, we want to be drawing the trend line above that price, okay, that's the most important thing. Don't start trying to draw on, trend lines from these regions here. If you're going to do that, that is actually a different aspect. It's called channels, and channels are something that I don't really believe too much in, so I'm not going to go into detail on that. But what we're going to be talking about in this one is trend lines. So first of all, as you can see, we've got this downward trend here. Okay, we've got this downward trend. The market has respected this level multiple times. Now, what constitutes a downward trend? What we would say constitutes a downward trend, okay, and a trend line to be applicable is at least 2 touches. Now, what I mean by that is we have this starting point and we have one other point. We've got that point there, we've got that point there. Okay, so we've got 3 points here. So this is a valid trend. Okay, it's a valid trend line. So what becomes important with this is once you've drawn it, it doesn't have to be entirely accurate. You can see that I've got there, the wicks are slightly sticking out. I prefer to use the wicks when we're placing trend lines. Okay, I do prefer to use the wicks, but they don't have to be absolutely 100% accurate. Okay, so we've just got that kind of obvious downward trend line here, and what we can see quite easily, I'm just going to turn the magnet off this time, is the market is getting to these points and it's rejecting. Okay, the market is getting to this point and rejecting. Okay, and even here we've got close, we haven't quite got there, but we have got to this kind of level and we've rejected. So it's very important in these kind of scenarios, especially if you're looking to do a long trade, for example. You don't want to be going long and buying this market here because there's a heavy amount of resistance above it, which is the trend line, right? So you need to be looking at, trading with the trend a lot more. That will help with your overall probability of winning these trades. And use these tools, such as the trend line, as a guide. Okay, so when the market is coming in here and it's wicking, we can expect that there's sellers at this region. If there's sellers at this region, we can expect that next move to go. And again, like I spoke about in the Fibonacci section, if we then add different tools like the Fibonacci, we can see the market actually got to 61.8 retracement level, got to a Fibonacci, got to the 61.8 Fibonacci, and then got to the trend line and then rejected. Okay, so perfect. What we call synchronization on this trade, where you've got multiple reasons why you should be shorting the market at that point. Now, when the market breaks this trend line, as we've got on this point here, what tends to happen is we tend to have quite a solid retest of this area. Okay, we have quite a solid retest of this area, and these are the opportunities where you can then see that change of trend, and you can actually get a nice trade, a nice position in at that trend line change. Okay, so as you can see on the daily chart that I've got here, we had that daily candle close above this trend line. We then had another bullish day after that as well, and we had this big retest of this candle. We had the sellers try and push the market all the way back down into these levels, but we couldn't achieve it. Okay, we couldn't achieve it. Again, I'm just going to add the Fibonacci just to show you the importance of the synchronization that we have here. And as you can see, we pulled down, not quite to the 61.8, we pulled down to the 50% level before we actually pushed back up. Okay, but clear change of trend, and then we have that movement to the upside. Now, there is a video later on called the Breakout Retest, and this is kind of what we're talking about with this here. But these trend lines, they can be drawn on Again, any time frame whatsoever. So I'm just going to jump down into an hourly time frame, and I'm just going to show you a specific trend line that we've got going on here. So you can either start at this point. Okay, we've got a couple of trend line touches. We've got one, we had that rejection, even here. Okay, so we had that first touch, second touch, third one kind of broke through it, but whipped. Okay, we didn't close, and then we continue bouncing. But then now we've finally broken. So what's happened? We've come back, we've retested that trend line before we then decided to absolutely tank about, what's that, 80, 90 pips. Okay, 80, 90 pip drop in pretty much one day. So you can see the importance of these trend lines. You can see that they work on multiple time frames. They are going to be very, very easy to draw in so many different places. I prefer the higher time frames, and I also prefer the. I don't really like to go any lower than the 1 hour time frame. 4 hours fine, daily's fine, but any lower than that, they're not going to be as reliable. Okay, but that's how you use the trend lines. Okay, that's how you draw them. Make sure that you've always got those 2 points. Make sure that it's always under the price if you're going up, okay, and over the price if you're going down. And then look and focus on whether the market is going to bounce, okay, from that level, or whether the market is going to break. Okay, and usually what you can see, especially with the breaks, is you'll tend to get a closure and a retest. Okay, you'll tend to get that kind of whip retest of that area before you then move to the downside. So again, even just looking at a standard trade here, if you waited for that retest, you saw that that retested at 2 o'clock on the 4th of January. Here's your position. Okay, you've got position here. Stop above the highs, so let's say 30 pips on that trade. And then we can look at targeting anywhere down here for a maximum of 65, 70 pips or so. Okay, so there's plenty of opportunity available in just this hourly time frame here to grab yourself a risk reward of 2.2 on this one. And again, just using the Fibonacci. So if we look at the Fibonacci from this level to this level, okay, and we throw in our area, our region, boom, there we go again. Okay, there we go again. So a nice place to actually target, if you were looking at placing that trade with that 30 pip stop, would be looking at that 61.8 level, okay, or somewhere between the 61 and 78. Okay, and again, you've got that perfect entry, perfect exit, and a fantastic trade. So, guys, I hope you find that useful, and we'll see you